Yo, what's going on YouTube? It's Krusty here, and today in this video, I'm going to be talking to you guys about how to use Fibonacci tool and how not to use Fibonacci tool. But before we get into the video, if you guys are new to the channel, be sure to subscribe down below so that you guys can see any and all future videos that relate to any trading, analysis, breakdowns, or lives at all. And aside from that, if this video did help you out in any way, shape, or form, be sure to drop a like for me so that way I know that these type of videos are really helping you guys out. And aside from that, blow the fuck up out the comments so that we can get this video boosted out to a lot more individuals within the trading community that really need help with concepts like this. So now with that all being said and done, let's get straight into how to use Fibonacci tool, right? So the first things that I want you to do and write down is number one, Fib tool will not work in a ranging market. So if you're clicked on this video, you probably have a general understanding about how to use a Fibonacci tool, and you need that little extra boost, that little extra push. So looking into this specific market right here, you can see price is ranging, but you can tell clear as day that market is bullish. And actually, let me take note of this. Whenever you're using Fibonacci tool, you want to identify market structure to have general bias for longs or shorts. So basically, if you're bullish or bearish, and then three, literally just swing high, swing low, or swing low, swing high, whether you're bullish or bearish. So let's look at this example right here, where market is basically just ranging, and we can do a little bit of a fib play right here. So what do you see price doing right here? We are consistently forming new higher lows, new higher highs, and then we start ranging a little bit, starting to basically not know which direction we want to go in price. So what do you see right here? You see price just consolidating. What does price do? It breaks out of this specific range right here, and we get a pullback. What typically happens when price starts to basically fly or melt in a specific direction? You typically get a pullback. So what are you waiting for within that pullback? The pullback, right? That's why you want to use a Fibonacci tool. So how I personally like to use a Fibonacci tool is I like to use it from the specific structural impulse leg that wiped out that specific point. So this specific impulse right here wiped out this high, and this high. So what I'm going to do is I'm going to swing low from this point on to swing high. And what do you see price doing? It taps my 50% extension. So let's talk about the extensions real quick. On the 38% extension, if price comes to your 38 and just continues to fly, it's basically showing you that price has a lot of momentum. And along with my 50%, if you're within this general range, you're getting a steeper pullback, and you want to really pay attention close to what price is doing within this general area, because price typically tends to come back and pull around this general area, which I like to call my golden zone, which is my 50 to my 61.8% extension. And after that, I like to target my 27% extension. So price tapped into our golden zone, and what do you see price doing? It's basically starting to wick off of that general area, and it can't close. So if I want to literally just trade pure trend, what I would do is I take my entry after I see a little bit more confirmation in candlesticks and a little bit more rejection, which would probably be right around this general area. Now, where I set my stops is right below my 78.6% extension, because if price reaches all the way to my 78.6 and she continues to go down, price is more than likely just gonna switch around its trend. It's not gonna give you that retracement that you want, but rather more or less basically break structure and go the other direction. So that's why I always have my stops right below the 78.6. And if I see some sort of candlestick confirmation within another general point, which is where leads you into candlestick Bible, that's whenever I'll consider taking tighter stop losses, and alongside with that, market structure. You can see here, that it's some sort of a break and retest pattern. So you can see price is breaking past this resistance point right here. What is it doing? It's retesting that point. So what are the possibilities that price would fly within this general area right here and then continue on? Very high, because we're in a trading market, number one. Number two, these SMAs are crossed to the top side, so my blues are on top of my red. Two, that's my second confluence. Three, my third confluence is that we are at the 50% extension. And then four, all I'm waiting for is some sort of a candlestick variation. And we got all of those, right? We get the wickage, we get the wickage, we get the wickage, but we closed above higher than these candlesticks right here. So what am I doing? I'm targeting my 27. That's my first TP. My first TP is actually my high. My second TP is my 27%. So we're going to wipe out this specific high first, because what are the probabilities that price can give you the pullback, come up, form a double top, and then start to melt? Very likely, but it can also just as much go to your 27. So that's why where risk management comes into play as a whole in general. And once you can really solidify your risk management, you know where you want to take out your entries, and obviously where you want to hold and so on and so forth. But that's not the whole point of this video. The whole point is just to show you guys how to use Fibonacci tools. So we got the break in this specific structural level. We got the pullback, and now we got the confirmation. What am I doing? Like I said, I'm just targeting. So that's how you use Fibonacci in this play. 38, a lot of momentum. 50 to 61, basically normal type of momentum. And then 78, it's a really steep pullback, and it could give you a really big risk to reward ratio, and or it's going to be some sort of a break in trend, how I like to look at things. And also, if it taps right around this general area, or if I just want to get in with absolutely no candlestick confirmations at all, like if I were to just go to sleep and I saw a price pull up here and it was giving me some sort of rejection, if I wanted to be passive, I'd literally set my stops down here, target my 27, and just let it run. If I want to wake up the next morning, then I wake up the next morning, and it's going to hit or it doesn't. But this is more of a passive entry. If you want to be aggressive, like I said, stops right here. So now let's continue moving on. I rambled on a little bit there, but let's look at this ranging market. So now that we've identified that we are bullish, what am I going to do? Swing low, because this is the impulse leg that wiped out this high right here, to swing high. Boom. We tap our 50. Now what do we get? We get our engulfing candlestick right there. What am I doing? Stops either below my specific structural level, which at the same time you can see left, it lines up with previous price action. So that's going to be a big key thing. You want to make sure it's going to give you a lot more confirmations if your Fibonacci tool lines up with previous structure, whether it's resistance or support, because it's going to give you more break and retest confirmations. And there's a fly literally flying in front of me. Please don't bite me. So, like I said, first TP is going to be the high of that specific pullback level. The next high is going to be your 27, which is going to be your TP2. TP3 is going to be your 61, right? So, price basically hit our first level of TP. And now what am I wanting to do? This fly is literally going to be annoying the rest of this video. Now, what am I trying to do? I want to use another fib play. So, swing my fib right there. Swing my fib right there. And what is price doing? It taps my 78. But it also doesn't close below it. But looking left, where's my structural level that correlates with it? I don't really see a structural level that correlates with it until all the way up here, where you can see some sort of resistance and then resistance right there. But price pulled all the way back and didn't quite give me a confirmation. So I wouldn't really want to take that specific. Oh my gosh. All right, I'm cutting this video. Hold on. All right, I killed the fly. I killed it. I think we're good now. So continuing on with this, looking to the left, there's no really structural level right there. So why would I want to take either a buy or a sell on a floating structural frame? That's going to be a lot less likely to go in your favor. And what did it do? It didn't quite tap my high right up here. What did it do? It came up and came back down, and it would have hit my stops if I had my stops right below this wick. Now let's look at the next play. There is no next play because of the fact that market structure is not continuing. If I were to draw out my Fibonacci tool and try it again, boop to boop, what does it do? It basically goes below my previous structural level and it closes. Okay, now let's just say shift in structure. I'm going to put my stops up there. My swing high up there, swing low right there. What does price do? Doesn't give me wickage. It doesn't give me some sort of a candlestick confirmation. Okay, maybe she's going for buys again. Let me see. Now swing high, swing low. Right there, structural level. Did I really get a candlestick confirmation or wickage? I did not. But did she almost tap my 27? Yes, but this is not a trade that I typically take just because of the fact that this is really sloppy price action. Now, okay, she went for buys. Now let's do another retracement. Boom, boom. Okay, she didn't reject. So you guys get the point of basically what I'm trying to say within this range. It is very hard to trade the range. But now let's look at a trending market, for example. So let's just go and reset the chart and let's look at this specific market structure in general as a whole. We are in a down trending structure, and I'm going to continue on with where market is at right now. So you can see some sort of a head and shoulders starting to form, where you can see the left shoulder right here, the head, and then the right shoulder. So what I'm going to typically do is just draw out my zones. Structural level of support and resistance right there. And let's just continue on with what price is going to do. She wants to buy. She wants to buy. Okay, cool. And then let's just wait for some sort of a pullback, right? Let's get our next zone up here because this is going to be our resistance zone. And let's just wait for some sort of a pullback. Boom. So we got a pullback. So now that we got our pullback, where is price at right now? We are at the 78, but price action looks completely sloppy. So why do I want to take a trade right there if there's really no clear confirmation and price action looks sloppy? Now we're trading below previous resistance point. So we're starting to look to me like we're going to range right now. So why do I want to take a Fibonacci tool on a range just like I showed you guys? So now looking into this specific structural break right here, what is price doing right now? Price is basically forming this hammer. We got some sort of an engulfing candlestick up here, but we are still within a ranging market. So what I'm looking for is some sort of a break past this level. I'm going to wait for retracement to then take price up to our weekly. So what am I going to do? I'm going to wait for that retracement. I'm going to wait for that break, or I can get in right here. What is price doing? She is starting to form new lower lows, new lower highs. You can draw out a trend line right here, clear as day. Boom, boom. Now, aside from that, we got some sort of a candlestick variation right here. We're trading above our SMAs. We closed above previous highs, and what is price doing now? She's giving us a pullback. Where? At previous structural level of support, resistance, support, support, and now acting as a support. So this is the perfect play to draw out a Fibonacci tool. So swing low to swing high. That wiped out the previous high. Where is she at? 61.8. Basically a candlestick variation. I think that's called a morning star if I'm correct. So what am I going to do? I'm basically going to take my buy wherever it's at. So let's just say, for example, it was down here on lower time frame structures. I take it down here, but since we're on the bigger time frame, I'm gonna just go ahead and take my entry up here so you guys can see this live. Set my stops right below my candlestick variation, just because that's how I personally like to trade a Fibonacci tool. Because why is price going to reverse back on a candlestick variation? If price reverses back on a candlestick variation, she was not meant to be. Like I said, our targets are going to be typically the most previous high, 27%, 61, and then basically following next structural levels of market. So this could be the next TP, this could be the next TP, and then your next zone of structural support, which could be right around this general area right there, and then tapping above my weekly level. So let's just say, for example, I just want to target my 27%. So what is price going to do at this point? We can either break out or we can hit my stops. It's a whole part of trading. I have not seen this specific point on this chart yet. So we're going to see what we're in for. So she almost stopped this out. She almost stopped this out. She stopped this out. Okay, so now we're just going to wait for some sort of another retracement. Why did she go against me? I said I wanted to wait for a breakout. So that's where patience comes in with actual trading in general as a whole. So now let's look for some sort of a breakout. Price is giving me a triple candlestick variation. Let's draw this zone out even more, and then let's continue on. Like I said, we're waiting for the breakout. Now we got the break. Now we want to wait for a retracement. Boom, retracement right there. Basically, break and retest structural level zones right here. So swing high, swing low. What wiped my previous point? From right there to right there, 38%. We are rejecting. So what I'm going to do is I'm going to scale in on my lower time frames, and I'm going to wait and see some sort of candlestick confirmation within this specific point, because I'm not just going to look and rely on the 4 hour or just the 1 hour. I'm going to see what market structure is doing on lower time frames so I can correlate it to higher time frames. So I'm going to wait for that break in structure now and basically showing me bullishness within this specific point right here. So what do I see right here? I see some sort of an engulfing candlestick right beyond this point. So I'm going to set my buy within this general area, stops below structural level and below my specific point. And then, like I said, we're targeting the highs right here, which is going to be that wick. And then we're going to target our 27 next. Boom, TP slapped. What did I wait for? I waited for that breakout. I said she could either go both directions right here because we did not get the breakout within this general area. You want to wait for price to break the range. So I just gave you a live example of when not to use Fibonacci tool. Do not use it in a range. Now you got the breakout, and what did price do? It smacked straight into TP. Now let's see if she continues to fly to my 27 and then my weekly. So let's set our 27 right there. We're targeting for a 1 to 3 now. She almost hit it. She basically hit it right then and there. Now let's see what price does. Stops to break even. Boom, she slapped it. Let's go to the 61. Boom, she slapped it. It's market structure. It's simple. You just got to continue on with what market is doing. This is a perfect example of fib that I completely missed just because of the fact that I was so focused on seeing if it was going to hit TP. You see a break and retest. It broke previous resistance, some sort of ugly resistance and support. But overall right here, you can see break in structural resistance and support. So what am I going to do? Swing high, which is this specific wick right here. Now I'm going to do swing low down there from that specific past impulse leg that broke past previous structure. And what do you see price do? She's trading at my 50. Next thing, what do you see? Candlestick variation right here. Maribozu. Boom. Buy. Sells right below candlestick variation. Target 1, 27. She slapped it. Target 2, 61. Let's see if she slaps 22. I mean 61, sorry. She slapped 27. She basically slapped TP. She basically slapped TP. It's simple market structure. You got to follow market structure as a whole in general. We got slap TP right here. Now what is price doing? She looks like she wants to sell. But you guys get the entire gist of things. You want to wait for some sort of a break in structure to use Fibonacci tools. So what do you see right here with GU? It looks like it's starting to switch in trend. It's starting to sell off. You're starting to see lower lows and lower highs, and you can see price is just making this specific structural point right here. So what am I going to wait for now? Price broke past my previous support levels. So now what I want to see is price just to give me some sort of retracement back up into that specific structural level. And also, I'd be able to use my Fibonacci tool. So let's see if she can go back up there. And if she doesn't, she doesn't. Doesn't look like she wants to retrace back up there. Let's see. Boom. We got another variation right there. Swing high, swing low, 38%. Shorts right there, above structural zone if you want to be more of a passive trader. If you want to be aggressive, put it right above your candlestick variation. So me being an aggressive trader, I'm going to put it above my candlestick variation. Target 1 is going to be that low right there. Targeting 1 to 1. Let's see. TP slap. TP slap, 27. Come on. 61. All TP slap. 1 to 3. And if I want to continue to hold, what am I targeting? I'm targeting this low right here. Like I said, you trade from structure to structural zones. You trade from zone to zone. You trade from level to level. And she's giving me a little bit of a retracement. What am I going to wait for? A break and retest. Support. Resistance. Let's see. Fibonacci. Let me get it. Oh, wait. I already have it. Fibonacci tool. Swing high. Boom. Swing low. Let me see. Let me see where we at. 61.8. Sells. Stops above. Target 1. Let's see if she slap. Target 1. And she slapped it. And now we back at where price is at live right now. She probably going to tap 27. It's market structure. It's simple. It's clean. It's easy. You just got to wait for that break and retest. I showed you guys an invalid way as a live example right here. I said I wanted to wait for the breakout, but before I even put in the trade, I said this could either go both ways because we didn't get the breakout. And what did it do? It almost hit my TP, but she went straight to stops. Regardless of how you put your risk management, whether you would have been at break even already once she closed up here, or you would have closed about 4 pips below it hit TP, that's completely on you. But if you would have just left that trade and you went to go to sleep, you would have been woken up down 1%, 2%, however much you risk on your account. Looking next at structure, what do you see price do? It gives you a break, gives you a retest, gives you a break, gives you a retest, gives you a break, gives you a retest. And with that break and retest, what am I waiting for? I'm waiting for candlestick confirmations, which leads with, you can either get it on babypips.com or you can get a free PDF online anywhere and get Candlestick Bible and just line that up with this. And you can be a very easy, it could be a very easy and simplistic way to just trade the trends. But once you see a ranging market, this will not work. So hopefully this video did help you out. And like I said, if this video did help you out in any way, shape, or form, be sure to subscribe down below so you guys can see any future videos just like this. And also leave a thumbs up and blow the fuck up out the comments. And let me know what you guys think, and to also boost the algorithm out to other individuals. With that being said, I have my free Discord down below where I drop any breakdowns and all analysis and just help you guys out the best way that I can. I have my free Telegram as well, linked down below. And I also have my Signals Room mentorship and all of that other good stuff down below. So if you guys want to go ahead and check that out, check the description. And I'll see you guys in the next breakdown. Peace.